So, something interesting is happening right now in the investing world, especially in the real estate world. You're seeing a real separation between experienced investors, those savvy investors who understand what's happening, and those newbies who just maybe got into the market for the very first time in 2021, 2022, and they're really nervous right now and sitting on the sidelines. So, I'm just sitting back and watching this all happen as we end the year right now and seeing savvy investors who are buying additional rental properties right now before the end of the year while we're in this flattening period. And for new investors who are sitting back and saying, I'm too scared. There's so much volatility right now. I saw how my 401k has done in the stock market. It's down 30%. I'm going to sit on the sidelines. So let's unpack that a little bit. Like the difference between a new investor who is scared about the current market conditions and an experienced, savvier investor who is not terribly concerned about the cash flow piece of the equation, but they are interested in getting in to build equity and have a tax position before the end of the year. So let's unpack that a little bit. So the new investor right now is seeing these market conditions. They're seeing these new jobless numbers that just came out this week saying, oh my gosh, we're seeing a lot of layoffs, especially in the tech sector, a lot of people losing their jobs, and it's probably going to get worse into January, into February, a lot of people losing their jobs. We're in an energy shortage right now. Inflation is still high, and the Fed may even increase rates again in the next couple of weeks. So that's scary. They see a stock market that is 30% down for the year, and they've lost a lot of money. They see all of the news around crypto right now and the collapse of FTX and the bankruptcy of BlockFi. So all of the crypto world is freaking out right now. A lot of people just maybe sticking it out in Bitcoin, but other sectors right now of crypto are running scared. There's a lot of animosity. There's also a lot of anxiety that's floating through the markets, the broader markets. And then when it comes to real estate, those newer investors are seeing that, hey, housing prices have come down now for the third consecutive month. Housing prices have dropped. Things are flat, but rents are still high. What do I do if I'm a new investor? If I'm a new investor, I'm sitting on my hands. I'm scared. I'm not taking the plunge right now. But if I'm a savvy investor, I'm doing something different. Because, and this is what we're noticing in the office at Morris Invest, we're having right now a lot of long-term clients who have been with us for many years who are calling saying, now is the time. I want to add an additional property right now. I want to add 2 properties right now before the end of the year because they get it. So what do they get? Here's what they get. They understand right now that we are in a housing shortage. We still need, as of today, 3.8 million houses short. So we have an absolute housing emergency in the United States. We need rental properties. We need properties for people to move into. It's incredibly difficult right now for people to get mortgages because banks have tightened, rates have gone higher. So we need rental properties more than ever before in the United States. So that's one thing that savvy investors understand. The second thing that savvy investors understand is the market is flat. Now, let me unpack that. This is incredibly important. If you're a new investor, I really want you to pay attention to this. Okay, let me just use this as an example in the stock market, for instance. Okay, so you have like Meta, Facebook, right? These big companies, Nvidia. I mean, I think Facebook was down like, what, 62%? Ridiculous plummeting in prices. Tesla stock down significantly. Disney stock down significantly. Roblox stock down significantly, which is crazy because my kids play Roblox all the time. Like, how the heck is that stock down? But it is significantly. All of them down, right? Down 30% on average across the market, and some companies down 60, 70%, the big boys. Okay, then now let's say you invested in certain sectors of the stock market that were flat, that had returned to zero. Like they didn't really do anything in the past year. If you were a hedge fund manager, okay, and you were managing a hedge fund where you called up your client, you're like, look, client, 2022, it was a really crappy year. We got a zero return. I'm going to tell you what, that hedge fund manager is going to get a huge high five. Round of applause for that guy. In a year when everything else is down like 60, 70%, you were able to take care of your client and get them a 0% return. That means it's flat, okay? Flat sounds scary to a new investor. Flat during a crazy volatile market cycle when you've got basically a World War III that has unfolded because of NATO, right? You literally have market turmoil. You have a human-created energy crisis in the United States and Europe. Human-created. This wasn't like a natural disaster. They created this mess. And you returned a 0%, a mostly flat return for that client. That client weathered this storm perfectly. So that's what flat means. It doesn't mean a bad thing, okay? Especially given this turmoil. So a savvy investor understands that if they had invested in certain sectors in the stock market where they returned a flat return, okay, we made it through this. We made it through this little tumultuous time, and we've remained pretty much unscathed by it, okay? They lessened their exposure. And that's exactly what would have happened if you were a real estate investor in 2022. Because if you had invested, even if you saw a decline a little bit in a value of a property, the rents are still high. The rents are still producing cash flow, and it's still a tax benefit. You're getting the tax benefits of owning rental real estate, on top of which you're getting the equity position. So let me explain this now from the stock market to now in terms of real estate. So if I'm a new investor and I hear, oh, prices are flat right now, prices have come down in the housing sector a little bit, I don't know. I'm sitting on the sidelines. I'm scared. I'm a newbie. I don't know. I'm going to wait. I'm going to wait till prices go up, and then I'll buy. That's literally what new beginners do. But a savvy investor, and that's why we're getting these phone calls right now from like our longtime clients that own 10, 12, 15 properties. They're adding 2, 3, 4 properties or 1 property here before the end of the year. And the reason they're doing that is because they know if they're buying it now while it's flat and they're still locking in this property at a lower price right now, so that when it goes back up in a year, 2 years, I'm getting all of that appreciation in value, but also in that 2 years, because I bought a property now, I'm getting that equity in the property. Do you see? That's the difference. That's a savvy investor. That's a savvy investor. They get the property now instead of waiting, and then they get all of that time in the market rather than waiting for it to go up in price. Then I pay more 2 years from now. So I'm going to buy the same property where I'm going to get an 18%, a minimum internal rate of return. So I'm going to get a minimum internal rate of return of 18% now. And then over 2 years, as this property goes up in value and the cash flow extends and grows larger, and now the market has returned and interest rates go back down, I could always refinance the property, of course, too, and get a better interest rate 2 years from now. But at the same time, I've now increased my equity position, and I've had 2 years in the market to build that additional property value. And also in this calendar year, before the end of the year, I'm getting the tax benefits on my taxes to mitigate my other income that I've had in 2022 or into 2023. You see how this works? That's a savvy investor. That's why I think right now is one of the best times to buy a rental property. I just did. I had family members that just bought a rental property in the past few weeks, and I think this is one of the best possible times to buy it right now because of the reasons I laid out for you. And by the way, my family member who just bought a property is a savvy investor who has multiple rental properties and gets it, understands these market cycles, and understands that now is a savvy investor's moment, not a newbie's moment. They're going to sit on the sidelines. They're going to wait a year and a half to 2 years. Then they start seeing CNBC headlines and Bloomberg headlines, or they flip on Fox Business and they're like, the housing market is booming. And they turn to their wife and they say, well, honey, now we should get into the market. Great. Now prices go back up. Now you're paying more for the property that you could have gotten 2 years earlier for maybe a lower price, and build up that equity position over those 2 years. So that's the difference right now between a savvy investor and a newbie investor, and why I think right now is the perfect time to invest in real estate. If you'd like to jump on the phone with our team to see if it's right for you, we'd be happy to talk with you. It's not right for everybody. Again, if you're not a savvy investor, if you're not a more advanced investor, now might not be the time for you. You might want to wait till you feel more comfortable, and that's totally fine. But if you do get it and you do understand what I'm talking about here, then book a call with our team. We can go over some numbers. We can talk about some of the brand new construction rental properties that we currently have available in some of the best rental markets in the country in West Texas and Missouri. You want to get your hands on. These are new construction in the best school districts in the country, in the most landlord-friendly states in the nation, and it's fully managed with a property management team that places a tenant in the property and we'll hold your hand through the entire process. So we'll have a link in the description. If you go to morrisinvest.com, that's our website, we'll walk you through the whole process. Thanks, everyone. We'll see you soon.